Hello, everybody. My name is Drew Dosek, and welcome to Trading the Close. Today, we had a gap down on the markets initially, and then the markets just ripped higher, and they didn't stop going until shortly in the early afternoon. So we had nearly 14 candles up on the spiders on the 10-minute chart. Really was remarkable buying pressure in the markets today, and then we all faded back down. But we did have lighter than expected PPI data that came out this morning at 8:30. And so you would wonder why we did gap down. But initially, it's really just because of where we are on the charts. And we're going to get into that here in a little bit. So let's jump into the heat map. And you can see here on the heat map today, we had the Dow Jones up 0.6%, NASDAQ down 0.43%, S&P 500 up 0.42%. U.S. oil is retreating back down 2.45%. Gold got a bounce on a key significant trend line, finally hit our first target. Bitcoin has basically been chopping around sideways. So you see here on the right-hand side of the screen, the health sector, the finance, the consumer products, all these sectors that were under pressure yesterday started bouncing back up today. But the big boys and gals here on the market, the Microsofts, the Googles, the NVIDIAs, Apples, Meta, they were all down. But then this one loner right here, Netflix, continues to defy gravity and go up on the charts. And we're going to get into that chart in this show and explain what I'm seeing. So into the spiders we go. And you notice today, I'd mentioned this yesterday. I said how I love mirror images on charts because oftentimes charts repeat themselves. So look at here on this pivot that I highlighted yesterday. If I drew this straight across, that was the high today. Now, today, we've got 2 minutes and 46 seconds left until close. If we do close above this one green candle that has a high of 589.08, that will make this blue trend line more solid support. And that trend line right here on the top end of the parallel is 583.42. And then if we do break and start coming back in, 575.46 will be the next area of test. And so, but let's get into the 10-minute chart so I can explain and show you what happened here during the day. So as I mentioned, we gapped down this morning and then we chopped around. We were almost looking like we were about to roll over and go lower to test the top end of this parallel. But then all of a sudden, all that changed. We had up here 18 candles, so over 14, 18 total candles going up right here until then pressure hit the markets. Folks started taking profits. And then now you see here, we've chopped around sideways going into the close. But if we do close high above this area right here, that would be near-term positive for the spiders. But I just don't think it's going to last that long. If I flip back over to the daily, look at this RSI. We're pushing near 70 now. So that's telling me we're near-term overbought, likely need to start consolidating or pulling back along this parallel in order to continue to move higher with upward momentum. Into the Qs. Qs really had a sideways day today. We had a move up, as I've explained over the previous weeks, right up into this area, and then we've started to stall out, at least for this time being. This has really been a tech-led rally, especially over the last week, and that's displayed right here on the charts. Right now, we're not that far away from the all-time highs on the Qs, only just over 4.3%, and then we will be tagging those all-time highs, so keep that on the radar. All the while down here on the RSI, on the Qs, a little more overbought than the spiders, pushing over 70 as we speak. Into the SMH. SMH had a slight down day, and I explained yesterday how we ran straight into this 886 retracement from this move from the highs that were put in over here in February 20th, this high pivot. So we still have a little bit more room to go before we get up there, but we're awfully close, much like on the spiders and Qs, to the most recent all-time highs. Obviously, with SMH, that is not the all-time highs, but this area was where the Qs and the spiders did put in their all-time highs. Still significant to watch on the charts, especially if we move above there. That would imply the spiders and Qs would also be able to push much higher above their all-time highs. Into Bitcoin. Bitcoin now has just been chopping sideways. This is all just still bullish consolidation. But what is starting to form is a little bit of curling over on this RSI. Now that can be typical during consolidation periods. So we'll have to see if Bitcoin makes one last push up, bust through this 50% area, the parallel, what that RSI looks like, because that will guide us further. As you may recall on the gold chart, I've been talking about RSI for a while, how we started having negative divergence on the weekly chart as displayed right here on the chart. And then even with this most recent push, we were actually started to negate that negative divergence. So, but ultimately this sort of movement and getting into the highs here and the highs here were telling us that price was going to go down in the near term. That's exactly what's happened. But look today where price went. It went right here to the $3,100 support area. And it wasn't just like magic why the price bounced right here. It was because of this long-term trend line. This long-term trend line can guide you as to where support and resistance areas lie. Even if price chops around through it, these key long-term support trend lines guide you for that area of a bounce. Now, will this bounce last more than a few days? We'll see. But the likelihood still for gold to go down, as long as the economy is doing well, is actually higher than the price actually going up. Into silver. Silver had a great day today. It did try to bounce back from yesterday's big fall down. We did actually trade much lower today, but silver did a fantastic job coming back up, trading in this area. And as long as it's trading right here in this wedge, you can almost define it with this big green candle and then also a line straight across here from these lows. As long as price trading in here, we have a chance to move up. And I did recall someone did ask the other day on a comment, like, how is that an inverse head and shoulders pattern? Well, this left shoulder, while it doesn't go up as high, excuse me, as it should go to make a quality left shoulder, this still would qualify for a left shoulder, a head, and then a right shoulder here on the charts. And if you look where that measured move is, excuse me, sorry about that. If you look where this measured move is, it's actually all the way up here at $38.97. So you can see how that inclining trend line, much like I just mentioned on gold, these long-term trend lines are very significant on the charts. Oftentimes, price likes to go and hit those trend lines because, as they've done in the past, they hit and fall down. They hit and fall down. So we'll see if this plays out. One thing that this would imply, though, should silver break out above this neckline and start moving up to this measured move, the economy is likely doing very well, as silver has more of an industrial component in it. Into U.S. oil, this trend line continues to be just the master trend line for the chart on oil for the near term. As we've seen, it's come up and gotten rejected, bounced, fallen down, come back up again, and then today getting rejected further. The support area is right where price went to today at the lows. This is the immediate support for this fall down. Should falling continue, the next support is going to be at these pivot lows, followed by 53.15. But on the upside, this trend line, we just need to watch it and see how price responds around it. Any break above and confirm will likely start releasing some more buying pressure into oil. All right, so now next up into nat gas. Nat gas did drop down beneath this support trend line. You see here at 360, we're currently right at $3.57. Now, this could just be a test candle, and we could reverse back up tomorrow and then start trading back in this tiny wedge area that's displayed on the chart. This was drawn just the other day, showing that this is potentially a neckline. Now, many steps need to take place for this neckline of an inverse head and shoulders pattern to form. However, this is on the radar and likely will be resistant should price continue back up into it. That trend line is at $3.90. If we continue to fall under this area, first support is going to be $3.38, much like what we saw on the oil chart on the last screen. Into the 10-year yield. Now, this was an awesome move on the 10-year, which also explains likely why the markets pushed higher today. We had a decent fall on the 10-year yield. Now, yes, the other day, I just drew this trend line highlighting that, man, if price on the 10-year yield goes up and breaks above this trend line, that would trigger an inverse head and shoulders pattern move all the way up to 5.289, which would not be good for the retail consumer, the home buyers, and also businesses that have to refinance their loans or leases for their commercial space. So ultimately, though, we had price on the 10-year come down at 4.449% on the charts. And if we continue down lower, right here is going to catch the support right here at 4.35%. Into Netflix. Netflix continues to defy gravity and push higher on the charts. Simply remarkable move that Netflix has had over the last several weeks, beginning there at the early stages of April. And as you see here now, though, we did pause, come down, and push up higher. Today, we got ever so close to the top end of that parallel channel. We got a high of 1187, and I have a high end of that parallel roughly at about 1191. I was looking to take a day trade on this in the live day trading room. We never just got up there. The price action on Netflix has been remarkable. But I do want to bring your attention to this parallel. This is a long-term parallel originating back at the end of 2021. You see it extends all the way through here. And every time price has interacted with either the bottom or the top, it has been rejected, in addition to the middle area of this parallel. Every time we come down to it, it's bounced. That's telling me this is a great parallel channel to help guide you on future price movement with Netflix. Now, with Netflix being up near the top, that means the likelihood of price to get rejected and sent back down is high. In addition, we have some negative divergence right here on the RSI, which also implies near term we should be heading down in Netflix. We'll see how the chart behaves in the future to see if that actually does transpire. If so, $1,091 is going to be that first area of support. Into Boeing. Now, Boeing, I bring this up because it did register a daily topping tail yesterday. One of the best ways to play these is for like swing trades or even day trades. You can even play a day trade on a topping tail. One of the best reasons why is because it limits risk. Whenever a topping tail fails, you simply can stop out of the trade. And so it gives you a very small margin of error whenever you're wanting to play this. And so back into the chart so I could show you the percentages to play if you are interested in shorting Boeing for a quick play. So back in here, we see right up at the top right-hand side of my screen, this topping tail did register a 50% retrace at 206.86 and a 75% retrace of 208.26. Now today we did tag above this 208.26 area, which would have been a nice entry for a short position on Boeing. Notice also on the RSI, overbought in the 78 range on Boeing. Makes sense for price action to start coming down. But if this starts acting like Netflix and defies gravity, wanting to take off like all Boeing airplanes do, we look back further on the charts and we notice that there's this declining trend line. Boeing has been under serious pressure over the last several years, whether it's faulty mechanics in some of their airplanes or whether they're caught up in some sort of turbulence with bad reporting, and also cutting corners, cost cutting for making some of their planes. They've just been caught in the news on the wrong side of the news several years in a row, which has caused investors to get out. Look at this bear flag that's been forming on the charts for years now. So if we were able to break above this trend line and confirm, that would actually be very bullish for Boeing in the near term. Again, that would be a place you could stop out. If we confirm above, you can even add up here on this resistance trend line, which is at 214.57. Now into Coinbase. Coinbase is pretty interesting action today. They got added to the S&P 500 here on Monday, and then price action reacted Tuesday, rocketing up, busting out of this parallel channel, going higher, even going higher yesterday too. But then today, SEC launched an investigation for Coinbase allegedly misstating the number of users that they have. So this reaction to the SEC news and the investigation just sent the stock plummeting back down. But this is to be inspected too. Whenever a stock is added to the S&P 500, there's a lot of ETFs monitoring and tracking the S&P 500 that do need to buy that stock. So initially, once that news breaks of a new stock getting into the S&P 500, buying pressure will be relentless and send that stock higher. But once those ETFs are done buying and they have the right weighting appropriate for this stock in the S&P 500, then that selling pressure usually comes in. This is something to keep in mind for all new additions to the S&P 500. It could be an initial short-term buy and then follow it up with a quick short play to profit on both sides of that trade. Into the charts again. Now, next up, we have some additional news. United Healthcare has been seeing a tremendous fall on the charts. And I'm backed out this far for a reason, to show you this long-term trend line that price gapped over today, but then continued trading higher from the lows. Now, United Healthcare has a Department of Justice criminal investigation linked to Medicare Advantage program. Well, United Healthcare replied to that and said they call this DOJ criminal probe deeply irresponsible. So they're calling that probe bluff. We'll see how it all shakes out in the future. But all I can do is read the charts, and I see on UNH, I see a bottoming tail that's occurred right here on the daily chart. And also, and you know what? I want to zoom back out again because I want to highlight something else. Volume is one of the biggest indicators for chart movement. All right. And so most people don't pay attention to the volume, but you need to include this when analyzing charts. It can really help you see who's getting out, who's accumulating, and at what mass they're doing so. So back into the chart, let me flip on the volume. Look at this. Boom. Look at this massive red candle right here down at the bottom of the screen. Now, where's the rest of the volume? You see anything else over here? I just see little blips. There's really nothing. It's incredible the amount of volume that's coming in today. So what that tells me is that there's a lot of investors piling into this stock right now. Now, UNH, as I said, it gapped underneath this major support trend line. And whenever price action does that, it usually likes to go a little bit lower. And just like that 50% retrace that I've described to you on previous topping tails, like on Boeing, we could play this as a play tomorrow with a 50% retrace, roughly right around 262.25. If UNH does continue to go lower, we have another major support level right here at 238.22. First resistance, which will be minor moving up, is going to be around 290.57, followed by these declining trend lines that you see here on the charts. I think this is a really optimal location to get into UNH for a long-term, long play, especially with all this negative news. And to be the best swing trader, you need to play the news with a contrary position, meaning that if everything is really bad and nobody wants that stock, all the swing traders like myself, we want that stock. We want to buy that stock when no one wants it, because this is one heck of a discount down here compared to all of the price action up above 460 that we see at the top of the charts. All right, next up, Dick's Sporting Goods. Dick's Sporting Goods came out with earnings today, and they also did beat. You can see here, they beat by 5.07% on earnings per share, and then on revenue, they beat by 2.48%. So it was a very good reporting for Dick's Sporting Goods, but you see the stock just dropped tremendously. One of the reasons is that they did come out with news, and they are purchasing Foot Locker. Usually whenever a company acquires another company, they take on some of their debt, and then also price action can fall because of that. But here could be a key buying opportunity for Dick's Sporting Goods. You see two levels that I've got displayed with these trend lines. One being originating from the low in October of 2023, strung to this pivot low right here. And you see price action is not that far away. It's right here, $171.21 on this first trend line. Now, should price action continue lower and falling, we have this other trend line that you notice I've connected pivot high to pivot high. And then even through here, you notice when price was trying to come up, it got rejected for a few days and then ultimately broke through going higher. That tells me that this zone right in here will likely be a great area to start accumulating a long position for Dick's Sporting Goods. This trend line on the bottom side is at $159.36. All right, guys, that wraps up Trading the Close. A lot of info spat real fast. Hope you guys enjoyed it. Look forward to, and today's Thursday, so I got a day off tomorrow. I hope you guys have a fantastic weekend. I'll be back on here on Monday. Until then, you guys take care.